Recently, the Insurance Insider released data on mergers and acquisitions in the insurance industry. They report 91 deals through the first half of 2013, 33 involving carriers, 46 among brokers, and 11 involving legacy carriers. Here to discuss M&A activity in more detail is Scott Littlejohn. He is head of U.S. Insurance Investment and Corporate Banking at BMO Capital Markets and joins us from the NASDAQ market site in New York. Scott, welcome to the program.
Thank you. Glad to be here.
Are you surprised at all by the M&A activity in the sector so far, or is this in line with expectations?
Well, look, we've been involved in a lot of the activity to date, so I wouldn't say it's a surprise. I mean, we kind of live and breathe the activity. We represented a buyer in a couple of the transactions that were announced recently. Our buyer wasn't the winner, but no, we expect to see more activity.
What is having the biggest impact on activity right now?
Well, it's hard to pick one factor. I think that generally it's optimism. If I had to pick one thing, I mean, it's always, there's a lot of psychology involved when you think about M&A, and it's people's view of the future oftentimes. And there is this greater optimism, I'd say, generally speaking. Whether you look at the economy, whether you look at capital positions, whether you look at operating results, things have improved, and that's led to this improved view of the future. Like I said, this sense of optimism, because when you do a deal, I mean, you look at the current impact, but you also think about how it impacts your prospects compared to the standalone. So I think it's really that optimism that's created this real catalyst for activity.
How have regulations affected M&A activity?
Well, when you say regulations, I guess, you really think about the capital requirements, which have become more conservative, I guess is the way to think about it, on a few levels, right? I mean, in this industry, in the insurance industry that we follow, the rating agencies oftentimes act as regulator in terms of the way they evaluate the credit and capital positions of the companies that we follow. And since the financial crisis, there's definitely been a greater scrutiny, higher level of conservatism. And as a result, we talked before about how you compare today on my standalone basis, how can I do relative to selling the company. When you compare how you can do today on your own, you look at your cost of capital, you discount back the future, and again, with this higher cost of capital, frankly, in some ways it makes it harder to justify that standalone situation. So in that sense, again, we think this scrutiny, this regulation has been a catalyst for activity as well.
What can we expect in the M&A space over the next few months into 2014?
Well, look, it's been busy, as I said before. I mean, we're very involved. We probably spend about 2/3 of our time on M&A. What you've seen in the past, I think, will continue over the next few months. There's been activity in fixed annuities, obviously. There's been private equity firms that have been very active there, and we think that'll continue. There's been a few non-core assets that have been sold. Allstate sold a non-core asset. Genworth sold a non-core asset management business. I think you'll see more of that pruning, rationalizing, so to speak. And then there's just selective add-ons, where people see growth opportunities. International markets, for example, Lloyd's has been a hotbed of activity. We think that'll continue. And other certain sectors, like I said, that are attractive add-ons, we think you'll continue to see that.
Scott, thank you for joining us.
My pleasure. Thanks for having me.
Scott will be part of an insurance M&A symposium being hosted by SNL in October. For more information on the symposium, visit the SNL website.